Welcome to this week's version of Nickels and Dimes, our weekly video series. Well, the CPI slash inflation data came out most recently, and it was not good. 9.1%. Obviously, the equity markets did not like it, so it looks like this economy is contracting pretty quickly. Things are challenging for most folks. And as I mentioned recently, unless you're in cash or shorting, you're probably feeling some level of pain. Even the bond market, as you likely know, has gotten hit. So one of the questions that we often get, or at least have most recently received, some of the questions are fairly consistent. And one of them is, well, Chris and team, so have the equity markets bottomed yet? Or are we close? Or, what do you guys think? And so what I thought we would do is over the next 3 weeks, with today being the first series, is talk about characteristics that, at least looking at history, have shown up when the market is at a near or at a bottom. So we always talk, or often talk, about the past does not necessarily equal the future, but it tends to rhyme. So one of the characteristics we're going to talk about today, again, this is going to be a 3-part series. So let's dive in. Markets, again, tend to bottom when equities are a certain percent of an investor's portfolio. So this ties into investor sentiment. Now, you may remember, investor sentiment refers to the overall attitude of investors towards a particular security or financial market. It's the feeling or tone of a market, or its crowd psychology as revealed through the activity and price movement of the securities traded in that market. So again, how investors feel is generally how they invest. In broad terms, rising prices indicates bullish market sentiment, while falling prices indicate bearish sentiment. So the American Association of Individual Investors, that's this AAII survey, they ask every week, they've done this since the mid-80s, they ask their members how they feel the markets will be in the next 6 months. So they think the markets will be the same, meaning flat, down, or up. And the most recent survey, as of the week of, let's call it early July, around the 6th, noted that the majority of investors are still bearish, meaning they think the market's going to be negative or down over the next 6 months. Again, this usually is used, meaning the survey and the results of the survey are used as a contrarian indicator. So when the majority of folks think the market's going to, let's just say, go one way, the opposite tends to happen. The crowd is usually wrong the majority of the time. So again, historical averages with being around 30, 30, 30. So a third, a third, a third, with about a third being bullish, a third being neutral, and a third being bearish. So you could see we have a very large relative position where most investors, at least most recently, think the markets are going to be negative. Now, of course, that does not mean that the markets have to head higher. It is said that investor sentiment is a secondary indicator. The primary indicator is generally price and volume. So basically the price of stock or indices and the amount of shares traded. That would be defined as volume. So again, investor sentiment, because again, investor sentiment actually has been very bearish for 30 to 60 days, and you can see the market is generally continuing to trend down. So furthermore, as we continue this conversation, when one examines the current equity allocation of investors, it appears that very little of the bearishness expressed in that survey, as an example, so very little of the bearishness expressed by investors has found its way into actual investment behavior. So really what that means is, though the folks in this AAII survey, which again is a very credible, long-standing survey, so though the folks in the survey are bearish, again, they think the market's going to be lower in the next 6 months, that has not translated into them taking action, meaning selling their portfolio. Let's dive into what that means specifically. Effectively, what they're saying is, again, according to this AAII data, that respondents had nearly 65% of their assets still in equities. So even though they're bearish, they're negative on the markets, they still hold a relative large portion of the portfolio in equities. And then, of course, the percentage likely came down simply because, the market has been down. So what does that mean on a relative basis? How does that compare to the last three really bad or, major market lows? So in 1990, at the bear market low, 2000 near the end of the 2002 near the end of the dot-com bust, and the 2009 bear market lows, investors had 45% of their portfolio in equities. Again, that's pretty telling. Now, the implication, if you're, haven't figured this out by now, is that stocks have more downside to go to mirror, or at least closely mirror, the equity allocation of previous bear market lows. So again, based on at least the last three very bad markets, again, the 1990 bear market, the 2002 bear market, and the 2009, March 2009 is when the financial markets bottom. The average investor had 45% of their equities in stocks, and now they still have 65%. So it appears, again, if the past is going to mirror or closely mirror or resemble the future, that we have more downside to go simply because that allocation is still a little high. So again, that does not mean that the past must equal the future. I want to caution that. But again, what we do is look at the past to give us some clues of what may happen in the future. Because again, today is part one of the series of, we're using the same question, have stocks bottomed yet? Because I'd mentioned earlier, folks have most regularly asked us about that. Again, one indication is, again, percentage of the overall portfolio that the client has in equity. It looks like, at least based on the recent data, that we have some more downside to go. Folks, as you know, things are challenging. The economy looks like it's contracting. We have inflation concerns. It looks like, again, at least based on the CPI data, inflation is rearing its ugly head with the number coming out at 9.1%. If you look at the equity markets, they're selling off, i.e. they don't like it. So all that to say is, if you would like a second opinion on your portfolio financial situation, you can just go on our website at nicholswealth.com and click on the Contact Us tab in the upper right-hand corner, and certainly fill out the information, and one of our advisors will reach out just to have a conversation. You may just want to have a conversation to get some clarity, and maybe that'll give you some more peace of mind and confidence. Thank you again for watching. Have a great day. Bye-bye.